Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as usual. And guys, I'm going to ask Bob about this picture that I saw. There's something wrong with it. Bob, I need you to explain it to me because it looks crazy. Well, let's dive in.
Trade Genius.
All right, Bob, what's wrong with this picture here? You got Nvidia in red overlaid over the old .com. Once again, we're comparing previous cycles, but white is Cisco. And this is an interesting chart. We've not talked about this type of chart. This is percentage of GDP. Look at Nvidia, Bob.
I know it's absolutely insane. And the thing about the CEO that runs this company, he's just a master marketer. So, we're pretty much out of the cloud storage story of the AI chip. And now we're in the Internet of Everything chip and robotics. So what he's basically saying here is that they're still fundamentally undervalued as a company. And, we've heard these stories so many times before, and all I can say is that would you be buying Nvidia at this price? Absolutely not. 12% of the GDP of the United States. Now, people get perspective from that. We're talking $3 trillion of market cap. And this company in 50 years won't be able to generate that much cash flow.
Right.
Yet people just buy it because he says we're going to keep selling more of them. Well, guess what? He just 2 weeks ago did an earnings report saying that sales are slowing down.
Right.
And yet they're trying to market cap this thing up again. I think personally, Phil, I think there's going to be a lower high on Nvidia. And when we get the sell signal on our algorithm on this one, I think it's going to be worth a shot that you could probably maybe make lifetime kind of money on, if you give it enough time. Because I think it's going to be, look, all these Eiffel Tower. So if you look at Nvidia, it's a bit of an eye chart for me. Let me look a little closer on this side. But we're looking at, Phil, pricing getting back down to, well, now because they did the split, you're talking pricing under $10, okay, for this thing to Eiffel Tower back to the beginning. And these things do Eiffel Tower. Remember, I don't care how great a product you have. If your customers don't have money to invest, then you're not going to make the money you think you're going to make. Okay, so that's the bottom line. And this is Nvidia is just a poster child for the exuberance in the internet. Look, we're going to have the same one in Bitcoin at some point with MicroStrategy. Although I don't think Bitcoin hasn't gone through its terminal lift yet, right? But all the other industries pretty much have done so. We saw this in 2010 too, Phil, when the gold and silver miners took off. Brave New World, blah blah blah, yada yada yada. It ran for a good few months, broke out, and then we had basically an Eiffel Tower 6 months later. So I think we can expect that here. This is all the marbles. If you want to do a trade, Phil, you can go long SPY or ES and go short Nvidia because you're really biasing yourself, to a leverage move to the downside, and you're still protected if it keeps going higher.
Yeah, I think Cisco's a really good comparison here because if you think about Cisco that was back, and this is the .com Cisco chart in percentage terms of GDP. And for those of you that are listening and not watching, essentially Cisco is a line chart showing 5.5% of GDP going up sharply into the .com peak. Nvidia is another chart overlaid on that, but it's 11.7%. So it's twice as high and the same parabolic type of structure. And parabolic structures, they don't just level off. Parabolic structures break. And that's what's coming. It's just a matter of what month does it occur in. Is it November, December, or January at this point?
Yeah, and the thing, Phil, too, is look when Nvidia suffered after the earnings report, no matter how good everything else did, what happened all day long, every day, the market would open up and we'd sell off the rest of the day. You remember how frustrating that was? It was frustrating to me for a couple of days till I figured out that, hey, the market can't move without Nvidia. So if they try to pop it in the morning, people are bailing out. Remember, these ETF managers have Nvidia all over every ETF out there. It doesn't have to be in an index. And if Nvidia is falling and the 9 other stocks in there are doing well, it's going to fall. And then when people see their ETFs fall, what are they going to do? They're going to bail out of those ETFs, forcing more selling. This goes from virtuous to vicious in a heartbeat. And you can blame the next stock market crash on Nvidia, okay, because it's just gotten out of hand. Everybody, is Bob at Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. You know, we have chat room, we have the algorithms for you, we give trades out every day, we educate you. So go to tradelikeagenius.com, check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
Yeah. And the other interesting comparison is that Cisco had a lock. I mean, they could have made the same argument that Nvidia's making here in terms of like Cisco, the routers are everywhere, right? Everything routes through a Cisco router and the entire internet. So you can make that same argument that their hardware is going to be embedded on every, data center and every, major point of presence or backbone distribution place, across the country, across the world. And I think largely, that is the case, right? Cisco products are everywhere. But look what happened to the chart though. Even though that's the case, even though long term that's the case, and Nvidia might be right, they might be embedded in every AI robot that's doing your laundry in 10 years. It doesn't justify the valuations, and things don't just magically go up in a like this in a sustained fashion. So even though they are going to be right, the reality is you have to recognize when you're in a bubble, and this is a classic tulip type bubble, or it just goes too far, too fast, and the valuations don't really justify the real world earnings that are going to come over time. This stuff takes time to mature, and just like it's almost like you said, you're pricing in 50 years worth of stuff, and a lot of things can happen in 50 years. Did anybody think MCI Telecom was going to blow up? I mean, that was a huge company, blew up, right? Big scandal. Things can happen. So we don't even know if Nvidia is going to be around in that time, being the one that's going to have all of their chips embedded. Maybe Google comes along and creates hardware and it's superior, right? So that's kind of what happened with Yahoo, right? They had that first mover advantage in the search engine space, and then Google came along, invented a better mousetrap, and completely annihilated them. Yahoo's still around, but your returns are nowhere near what they would have been if you had played into Google as well. So it's far too much money here in terms of forward-looking valuations, and in terms of forward-looking time, it's far too bloated to be putting money to work here.
Yeah, look, Phil, you and I have actually real world experience in this environment. You owned an ISP, so
Yep.
You understand the technology from that standpoint. I worked for the service bureau company that was bought by Control Data. Both those companies had a lock on mainframes, a lock. And 20 years later, both are gone. Gone. And you're talking software. And look at IBM. Remember, they control this. They have everything. Everything's in capital. Look at Intel. These companies are now second-rate companies. And I'm not saying Nvidia is doing anything wrong whatsoever. I think they're doing all the right things. It's just that people are too excited about it. And when the selling starts, people don't appreciate. It's not just Nvidia that's going to fall. It brings the whole entire market with it because it's permeated, just like Apple permeated. You'd be surprised where you'd find Apple and Nvidia shares inside of ETFs. You'd be absolutely shocked. Why is it there? And look, when it starts going down, affects the results. People get out of the ETFs, and it just brings the whole thing down. So, having said that, the week's playing out the way we think it is, and probably tomorrow is going to be Free Money Friday. I would make a bet that Monday will probably be up too, and then the news comes out on Wednesday, and I think the back half of September is typically pretty bearish. The flows are bearish, so we're having a good week. We'll probably be lightening up here throughout now till Monday close, and kind of sit on our hands Wednesday and see which way the wind blows.
Yeah. All right, guys. Well, let us know your thoughts. Do you agree we're in a bubble? And if you do, what month do you think we top out in the next 6 months? Post that below. I'd love to hear your comments on that. Otherwise, if you need help navigating these markets, as you guys can see, we weren't lying. Markets are extremely volatile. They're only going to get more volatile as we get into the end of the year. So if you want help navigating these markets and want to get into the room with us, head over to tradegenius.co. Check out the specials we have over there. There's one to fit your needs. Thanks, Bob. We'll see you guys in the next episode. Take care.
Trade Genius.